Hello, this is Samira from Diamond Accounting. I provide accounting, bookkeeping, payroll, and fractional CFO services. Today, I want to show you how you can better make sense of your W-2. People say, oh, my contract was $80,000 a year, but this is not what came to my bank account at the end of the day. So what were the differences? So in this Excel here, I have the annual salary. It's just an example. Let's say your contract says you're getting $80,000 a year and you're going to be paid every 2 weeks. There are 26 pay period if you are getting paid every 2 weeks. So that means 80,000 divided by 26 at each pay period, that's what you're going to be getting. In this example, I'm assuming you're not getting any healthcare benefit, any pre-tax benefits like HSA, 401k, all that. Like I'm just keeping it simple for this example. So this is your wages every 2 weeks, and you're gonna have to pay federal tax on this. Let's say again, like your effective tax rate for federal is only 18%. Social Security tax, you pay 6.2% of your wages for Social Security tax, and your employer will be matching another 6.2% for you. And you will be paying it if you're making less than 168,400 a year in 2024. So each year, IRS tells us what's the base for Social Security, and in 2024, the base is 160,400, meaning if you're making more than that, you're not paying more to Social Security. This is a cap. And it works out to be like $10,000 something. So this caps, Social Security caps at that amount. Medicare, you pay 1.45% of your wages again, and your employer will be matching exactly same. So you pay and they match for you. And you will be paying it regardless of your wages. And you keep paying it. And honestly, if you pay more than $200,000 a year, you will be paying supplemental or additional Medicare, which is 0.9% of your income that you make over $200,000. So that 1.45, you still be paying it, but on top of that, you pay 0.9% of wages over $200,000 in a given year. State tax, depending on which state you are, some states like Florida, Texas, they don't have any state tax. But if you are in a state like me that's subject to state tax, you will be paying it. And depending on the state, or some states have flat rates, some states have tax brackets. Just for simplicity's sake, let's say your state is charging you 5% state tax here. So in that particular paycheck, this is all your taxes you're paying: federal, Social Security, Medicare, state tax, and this is going to be your net pay. So from 3,076, you're only getting paid 2,385, and you probably are not going to get any of it back at the end of the year when you file your taxes, assuming everything else stays with no change, assuming you don't have any other losses or no other cases that would offset this amount. So, but some of us, when we work, we do have health insurance benefit. We do provide to 401k, or we have HSA and other pre-tax benefits. So if that happens, let's say you are paying for your health insurance, just let's say $5,000, right? So your tax is gonna be calculated based on the net. So here, really, you're gonna deduct this amount from your annual salary, and this is gonna be what will shown on your W-2 wages. So this is gonna be your compensation, which is 80,000 minus $5,000, which is $75,000 divided by 26, which is 26 pay period in a given year. Let's say you're contributing to your 401k, I don't know, let's say $15,000. Let's just create another row here. So really your taxable wages is going to be 80,000 minus healthcare minus 401k. So really what we're looking at here, you're going to use 60k taxable wages divided by 26, even though your annual wages is 80,000, but you're looking at taxable wages. This is going to be the outcome. So it all depends on what you're contributing towards pre-tax deductions, what kind of benefits you have. You could be having taxable life insurance. If you have taxable life insurance that your employer is paying on your behalf, that's a taxable benefit that will get added here. It just depends on the circumstances or the benefits that your employer is providing to you. But for most of us, for just simplicity's sake, this is gonna be the situation for most W-2 employees. I'm gonna be doing another video for self-employed individuals, uh, specifically LLCs and solo prop owners, if that's the case for them, because they are their own employer. Basically, they employ themselves. They're gonna end up paying this for themselves too. So if you were employee, your employer would match exactly the same for you. So not only they would pay you this, they would have to pay you social security. They would have to remit some social security and Medicare to IRS on your behalf and match it for you, plus the unemployment insurance that they pay. But if you were gonna be if you were gonna be self-employed, meaning you're the boss of yourself, you would have to pay this double. Okay, this is going to be another video I'm gonna cover. And thank you for listening. Please leave me a comment what other videos you want me to make. And see you next time. Thank you.